So in this video, the following video, I'll be showing you a setup of how I managed to catch this US30 trade. Very nice US30 trade. Very nice US30 trade. Even scaled in on the trade. Now we have hit TP and I'm about to get out. How I managed to catch this very simple, nice US30 and some nice NZDJPY with AJ meaning AUDJPY. So in this video, I'll be explaining to you the simple strategy I use to trade this account. I almost lost the account, obviously. You saw that. It's a My Forex Funds Evaluation Phase 2 account. I'm supposed to reach the target. This is AUDJPY. I've been on this trade from the top structure. And now my stop loss, I'm about to manage the trade and move my stop loss here. So if you like such content where I show you how to trade your My Forex Funds account, how to get a funded account from My Forex Funds, like the video, leave a comment down below telling me what kind of videos you'd like to see, more videos that you'd like to see, and most importantly, leave a subscribe subscribe to the YouTube channel, because I'm going to be sharing with you my structure and my Forex. I'm going to be sharing with you the way I trade, market price structure, and my trading journey as a whole. What's going on, YouTube? In this video, I'm going to be showing you the trades that I was able to catch on NZDJPY, AUDJPY, and US30 trading My Forex Funds Challenge Phase 2, and how I almost lost the account, and the little nice tactic that I used to avoid losing the whole account, reaching the overall drawdown in just 1 week. Now, if you want to see that risk management tactic that I used, that little risk management hack that I used to avoid using the account, watch the video till the end, see my trade back breakdown and what I was seeing, what was going through my head when I was seeing such setups on the market, and my psychology, because obviously it was a psychological thing to trade this account, as it was very close to reaching the overall drawdown limit. So let's first start looking at NZDJPY, and let's go to the 4-hour. On the 4-hour NZDJPY, we can clearly see that we have had this impulsive move to the downside. This is impulsive move to the downside. And after an impulsive move, for the market to continue to the downside, we expect that it will prepare an impulse correction to the upside in the form of either a bear flag and a continuation. This is what we expect as a continuation structure. But for a reversal structure, we expect that the market will impulse and then correct to the downside with a descending structure, giving me an indication that we are potentially going to reverse to the upside. So using that theory, that impulse and correction theory, I was looking at NZDJPY, and I saw the market here had an impulse. We had an impulse overall on the 4-hour. We first had this impulsive move to the downside, corrected, impulse, and then corrected all the way, breaking this previous high. Now, if you are trading a support and resistance, you could have said we have broken this high and we are retesting to continue to the upside. But because I'm trading purely price action and market structure, when you go to the 1-hour, you'll see deeper price action. You'll realize that the market here, the market in this situation is actually correcting. Whether it breaks this previous high or it doesn't really matter. As long as it is overall still in this ascending correction after an impulsive move to the upside, I will be looking for sales. That is what I told myself. And I realized that the market could potentially be building up an ascending structure, which is a big term correction. After this little impulse correction here, we impulsed to the downside and we were in this very big larger correction. So I entered my sales. Once the market broke this correction to the upside, I knew that we were now finishing the correction. The correction phase was now dying out and we were getting into the impulsive phase of the market structure. So once the market broke up here, I entered a sell, put my stop loss back into the ascending structure, which is our correction zone, because if the market was to come back here and it would have taken me out, this would have been a fake out, and then potentially I would have found a better entry afterwards. So I would have preferred that if the market is to go back into the ascending structure, I don't want my trade to be caught in there. I would rather be out and wait for a better entry. That was my thought process around that area. So once the market broke this high, I knew there was potential for the market to take a lot of people out. There was potential for the market to take a lot of people out because they could have probably thought the trend is now about to change. You are no longer forming a low high, lower low, lower high, and lower low. Once you see the market break the previous lower high, the main public's opinion, the main majority opinion of retail traders, you'll tend to think that because we have broken this here, that means the downtrend structure is dead and we are probably going to continue to the upside. And you would have taken buys at the breakout only for you to get taken out because the longer term perspective is still we are moving to the downside. So as the market broke out here, I took my sales on a Thursday morning and I held them long term. So what was the next thing? The next important thing was trade management, how I was going to manage my trade. So once the market gave me this first impulsive push here, an impulsive move to the upside, to the downside, an impulsive move to the downside, you'll realize that it formed structure here. It gives us a low, a lower high, and now it has formed a new low. So after forming this new low, my stop loss was now at this high. That is very close to break even. So if the market was to push back here, I wouldn't have minded being taken out at break even. So at this point, the market, my trade now was a risk-free trade. And as confirmation, before going to sleep, when I went to the 15-minute chart on a Thursday night now, I saw that the market was forming more of an ascending structure. After what? After we've had an impulsive move to the downside. So I repeat, after an impulsive move to the downside, whenever we get an ascending structure or a sideways structure, most of the times it signals we are going to get a potential impulse back to the downside. So seeing this confirmed to me that the market is most probably not done impulsing to the downside. The impulsive phase is not yet done. So with this structure, I left my stop loss here at around break even and went to sleep. And this trade here I then closed it on a Friday, just before market close, as the market was here. This was around, this happened here around 8 o'clock, I think, when I closed this on a Friday, 8 p.m. I closed this trade on a Friday and it was a very good setup. Now, going on to the next trade. With the same theory that I trade, the same market structure approach that I have, the same perspective, let's go on and look at AUDJPY and how I was able to catch AUDJPY. So this is AUDJPY, has about the same structure as the trade I was just talking about now. AUDJPY has this very same structure as NZDJPY. So on the overall, we are having this ascending structure. This ascending structure has been formed after an impulsive move to the downside and a correction to the upside. So we are expecting that potentially we are going to impulse to the downside. But because I'm a day trader, I'm not looking to catch a whole big move like this. I'm not looking to catch such a move here. I want to capitalize on small time positions right there. I want to capitalize here on the current price structure, because also I want to avoid holding trades over the weekend, because for you to catch such a big move, which would mean you are willing to hold trades over the weekend. So what I saw on AUDJPY, we have had an impulsive move to the downside, currently correcting with an ascending structure, the same structure that I was just talking about, we have formed here. Let me dive deep into the 1 hour. Diving deep into the 1 hour, you will see something very important. So on the 1 hour, you'll realize that as the market keeps on approaching this area here, whether you call it a trend line or what, when it keeps on approaching it here, the market pushes to the downside. So I realized that fact, and I realized that as it was touching here, it was pushing back to the upside. So I realized that that might be a very important piece of structure. What did we do before this? We had an impulsive move to the downside. This is an impulsive move. I mean a clear move that shows clear direction. This is clearly showing that the market is going to the downside. So it is a clear impulsive move with bearish momentum. So seeing this and getting this correction, I knew that the next move was supposed to be an impulsive move to the downside. I expected that the move was going to be to the downside. It was not 100% sure that the move was going to be to the downside. But once we had this impulsive move to the downside, a long-term correction, break of structure. Now, you'll see something very important. I don't have anything against support and resistance, but if you have had this as your area of support and resistance, the market resisted, broke out, retested, you could have entered on a potential buy here thinking it's a break and retest trade, only for you to get taken out because the long-term perspective is the market is still going to sell. We were just in a correction zone. By the way, we are still in a correction zone. The correction zone is looking more of an expanding, as I just said. Would be very interesting to see how the market is going to react here. But moving on, let's go into how I entered, how I finally said, okay, it's time for me to sell the setup. When you look into price section, inside this push to the upside, which was corrective, inside this correction to the upside, and inside this ascending correction, look at what we are having here. The market formed this high, couldn't break to the low here, and push to the upside. This formed a little bit of an ascending structure. Now, with the formation of this ascending structure, I saw that as a nice way to enter, put my stop loss above the structure, because if the market breaks to the upside, means my correction is invalidated and the market might probably never come back to the downside. So I'll rather be taken out if the market is to go there. Caught this nice perfect sell. In the morning when I wake up, the market had been preparing this. Once the trade management part, when the market pushed to the downside with this impulsive move, I put my stop loss just below this previous ascending structure that it had formed, put my stop loss there. When I woke up in the morning, let me go to the 15-minute chart. When I woke up in the morning, this is the structure that had formed. So this structure here confirms with the theory: impulse, correction to the upside, potential push to the downside. So when I saw this ascending structure forming, I realized that we constantly kept on rejecting it to the, a move to the upside there. We had our first, second, third. On our fourth touch, I just waited for the market to continue to the downside. To finish off the move. Trade hit TP. I manually closed because I don't like putting automatic take profit areas. I only put my stop loss on MT4. So the trade was closed and it had a nice risk to reward ratio. Let me check that out. A 1 to 4.14 risk to reward ratio. Very beautiful setup. Played out exactly as I had thought. Now we will be waiting to see what the market looks to do at this area. Whether it gives us a piece of structure there. Maybe gives us a descending as we approach here. Then we push back there. Or we continue to the downside. If it is continuing to the downside, I'll have to wait for the impulsive move to the downside to die out, give us a correction, and then potentially enter again to the downside. Now let's go to the most important pair. This pair I love the most. It's an indice. I don't know if I'm allowed to call it a pair before I get some comments saying, oh, it's not a pair, he's not a trader and whatever. So in this structure here, very clear structure, the market is of course in an ascending structure. Overall, we keep on finding support here, but also at the top we kept on finding resistance at that area, at that trend line. I use trend lines to rather find an angle that the market respect instead of saying it is a resistance level. So that is it. Also, my lines here are not support and resistance. They are lines of areas of inflection or areas of influence in the market that I see that the market previously respected, and the most recent areas. I don't go back to price something that happened way back and say, oh, the market is respecting this zone, then I put my lines here. No, that's not what I do. I look at the most recent price structure and the most recent price action. So going on to look at US30, what had happened is, again, going back to structure, if the market impulses to the upside, correct to the downside, then we expect that the next impulse is going to the upside. If the market impulses to the upside but rather corrects still to the upside, we expect, or we use this type of structure as an indication for a potential drop to the downside. So this is the continuation pattern for buys, and this is the reversal chart pattern for sales. So look at what happens here. The market has an impulsive move, and then the correction is rather to the upside. We correct to the upside. So with that correction to the upside, if I go back, with that correction to the upside, we expect that the market will potentially push to the downside, will potentially show us a reversal. So let me go back to, when I go in deep to the 15-minute chart to now show you how I managed to enter this trade. My first trade was on a Thursday here, on a Thursday night. The market price broke out here right after the New York Stock Exchange open. US30 broke this ascending structure, ascending correction. As it broke here, I had my first entry. When the market closed below, my stop loss was back into the structure, because if the market is to fake out and go back into the structure, I'd rather be taken out than experience a huge drawdown when the market reaches this area again. So when the market broke out here, gave us a correction in the morning, that is Friday morning, it gave us this correction here. I used that as a potential scaling in opportunity, entered again at this area on a Friday, and I caught the overall move to the downside. So that is how I was able to catch US30, AUDJPY and NZDJPY, just using proper market structure, proper risk management, and following my trading rules. Yes, so that is how I was able to catch US30, AUDJPY and NZDJPY. Now, if you're interested in learning the whole simple strategy and market structure, leave a comment down below. If you are interested in the kind of content that I am releasing, drop a like and leave a comment below. In this YouTube channel, I'm going to be journaling my Forex journey with you guys, showing you market structure, teaching you simple trading strategies that I've learned throughout the course of my journey, taking my Forex funds challenges, trading challenges, taking the FTMO, and potentially reviewing prop firms. So if you're interested in such content, drop a like, share, comment, and most importantly, subscribe. Now for the gist, the juice of the video, how I avoided losing the account. So what happened is, if you have seen the video clearly, the video where I was closing my profits on US30, if you have watched it clearly, you'll realize that I'm not actually at break even. I was actually, the equity is at break even, but the balance is is at a minus 4.3%. So during the week, I had a very slow start to the week, very slow start as the week was beginning, and I had lost 4.3%. So I had to change my mindset, had to change my psychology and my trading risk. So usually what I do is, per trade, I risk 1%. And when I'm trading prop firm challenges, I risk 1% per trade, because I'm making an attempt to pass the challenge quicker, in a quick manner. But once I lose, this is the juice. Once I lose more than 4%, what I do is I reduce my risk per trade to 0.5. That way, if I constantly keep on losing, I have allowed myself the ability to place more trade. I've allowed myself to have more trading days. I've increased the trading days. So the downside to that is, if you don't know market structure, if you don't have a trading strategy and you're just freestyling, you are potentially going to lose the account overall. Yes, but it would have the downside is, if you constantly lose, the downside would be, yes, you're going to lose your account. Obviously, there's no way to avoid that. If you constantly lose, even if you reduce the risk to 0.5, it just means, instead of losing with five trades now, you are going to lose with 10 trades. So if you have 10 setups and they both fail, they are both invalidated, then you would have lost your account. That is the downside. But the upside is, instead of having only 5 setups, you now have given yourself the ability to have 10 trading setups. And what you are supposed to do is, you're going to risk 0.5% until you are up at break even. Once you reach break even again, that is once you reach $10,000 again, because this is the 10,000 account. Once you reach that point, you can now go back to risking 1% per trade. So this is the BW Trader. I hope you enjoy the comment. I hope you enjoy the content that I'll be bringing to you. Comment down below if you enjoy the content and what type of trading video you would like to see from this channel. Subscribe if you like the comment, because I'll be dropping more trading gems, free strategies, even giving free signals on Sundays. Like tomorrow, you should be expecting a weekly forecast. I'll be dropping a weekly forecast tomorrow. Hope you enjoy. Thank you for watching the video till the end. Until we meet again on another video, peace.